Good afternoon. In this video, I'm going to talk about the impact of stock exchange market of Mexican economy. The activities of the stock market influence the country's affect banks, monetary policies, and expansion of the country's gross domestic product. A stock market that has been by and large bullish, and its activities will generally influence economic policymakers to raise interest rates. With stock prices rising, investors and consumers have more wealth and optimism about future prospects. This confidence spills over into increased spending, which can lead to major purchases such as home and automobiles. The result leads to increased sales and earnings for a corporation, further boosting GDP. The Mexican stock exchange, known as the Bolsa Mexicana de Valores in Spanish, is the headquartered in Mexico and is the country's main full-service securities exchange. The exchange deals in cash equities, derivatives, and fixed income products. Securities traded on the BMV are often denoted with suffix. A stock exchange serves as an economic barometer that is indicative of the state of the economy. It records all the major and minor change in the share price. It is rightly said to be the pulse of economy, which reflects the state of economic. The four rules of stock exchange in the company is buying and selling shares, mobilizing savings for invest, leasing of companies, issuing of securities, and raising capital. But liquidity and size are two independent if a time linked factors. So Blau says that his research indication that when a market grows, that is when stocks become more expensive. Inequality does to the large the stock market, the greater inequality. Thus, inflation hurt the stock market. An inflation rate between 1% to 3% typically considered healthy for stocks. Periods of high inflation, on the other hand, often cause uncertainty, volatility, and a slowdown in spending, leading to lower economic growth. In the long run, stocks beat inflation, but they do it because of the equity risk premium. They are not an inflation edge. They have a negative correlation with inflation, said Mars. And finally, with high inflation has historically correlated with lower returns on equities. Values stocks tend to perform better than growth stocks in high inflation periods, and growth stocks tend to perform better during low inflation. And that's all. Thank you for watching my presentation.